what's happening with Blue Star, given that the earnings fine print does entail that the revenues have seen an uptick of roughly about 21%, but their margins have seen a little bit of a dip of about almost 32 basis points. The net profit, though, is higher by 21.5%. Of course, they've reappointed Mr. V.S. Advani as CMD for next 5 years too. So let me welcome him on board. Mr. Advani, good to have you on ET now. Thank you for your time and congratulations on your extension once again.
Thank you.
Right. Let's talk about the numbers then. Your Q4 saw strong top-line growth, especially in the EMP and the unitary segment, but margins have managed to miss the estimate. Tell me, what were the headwinds that you faced?
So, if we look at the full year, we actually had a good year. Overall, top line, we grew to about 12,000 crores, and we were able to grow our EBITDA by about 32% to 876 crores. So, EBITDA margin actually improved on a full year basis to 7.3%, which was up from 6.9% last year. For the quarter, like you pointed out, revenue grew 21%, so reasonably strong revenue growth to about 4,000 crores. EBITDA grew by 15% to 279 crores. Slight drop in margin there from 7.3% to 7%. I think that's more to do with the business mix, really. We had a very strong segment one growth. As you know, that segment one margins are slightly lower than segment two margins. We trend about 7.5% in segment one versus 8.5% in segment two. So it's really about that. If you look at the segment two margins on a standalone basis, we came in at 8.4% versus 8.3% in the last year. And segment one was 7.6% versus 7.5%. So really, it's about business mix.
So given the early onset and the intensity of, summer this year, coupled with unseasonal rains as we've been seeing right now, tell me, what kind of volume growth are you expecting for the next quarter? Because, what we've seen from some of the, cooler manufacturers, for instance, already because of the onset of early summer and, the hottest February and the hottest March, one has seen a huge volume uptick.
Yeah, so this is the million-dollar question, right? So we had a very strong March month. Actually, some of it was created by news in the market that there were going to be compressor shortages. So we had dealers buying large stock in advance in March and holding that inventory. April, unfortunately, has been an unseasonably rainy month in many parts of the country, as you know. So actually, tertiary sales were slow. And because of that, primary sales in the industry have actually degrown, as per reports, by about 15% for the month of April. This is room air conditioners. We have done slightly better. We've done about a 3-5% growth over April of last year. April last year was a huge month for the industry overall, if you remember. So we've done marginally better than last year, but certainly below what our expectations were for April. Now, May, we're already 1 week into May. It again has been unseasonably rainy. But we're still very hopeful that May and June are going to be hot. The IMD forecast is still for a very hot summer. So we remain optimistic, but heavily dependent on the summer. But I will say this. I think based on our experience of FY24, of course, FY25 was a great summer. But if I take out the growth because of the unseasonable heat last year, I think we're still looking at a fundamental growth about 15% for the industry, even if the summer isn't what we expect it to be, because there's an inherent latent demand in the market for this category, as you know. So I think it's a 15% growth for the year. If we have a washed out summer, if we're able to get a good May and June, I think we do better.
Vani, just wanted to take that point forward because we believe that and we know that a lot of pre-buying does happen in the quarter gone by itself. But given that the weather is quite pleasant, at least where we are sitting in Mumbai, do you anticipate that the Q1 volumes will be a little weaker than what you have seen in Q4? And there's a risk that the volumes in Q1 can be a little lower than anticipated?
Yes, absolutely. So, when you lose an entire month of a quarter, so April is lost, right? I told you industry has degrown by about 15%. We've grown marginally by about 5%. So that's a big month that is lost. As I mentioned, we're still hopeful that May and June there should be some recovery. But on an aggregate basis, Q1 will have lower growth than Q4 for sure. It was on the positive side, unlike in the past when most of us were importing products from overseas. We all had very high inventory levels, and then there was a rush to liquidate inventory. This time around, as I'd say 90-95% of all industry is locally produced. And so while there is stock in the channel, I think the manufacturers will have flexibility of ramping down production based on demand. So we're not going to have an inventory issue like we would have had 3 or 4 years ago. And certainly there'll be some reduction in Q1 outlook.
We think Blue Star means window summers, but there's a large business of Blue Star which comes from the industrial segment. Now, the industrial segment is not going to be jumping to some kind of a conclusion looking at whether it is hot summer or mild summer. They will spend when there is expansion, when there is demand, and when new buildings are getting built. What is happening to that end of the business? A. B, since we are paucity of time, I'll throw in one more question. You raised a lot of capital when last time we met. You raised, when will that start kicking in, and when will I see the magic of capital in your business?
Sure, wonderful. Nikunj, thanks for asking about our B2B business. Not everyone does. So we had a very strong quarter, as you saw. We had revenue growth of 30% in Q4. We had EBIT growth of 33% in Q4. So very strong quarter. I'm happy to tell you that the carry forward order book is at an all-time high. Obviously, that drives the outlook for the business. With that, we are very confident of a strong Q1 as well as a full year looking forward. So that's across our projects business, which has done extremely well on the back of Make in India investments in manufacturing, in data center projects, and selectively in commercial buildings, even there's been some recovery. So we're fairly optimistic about the outlook for that business. In fact, government spending has returned. We had mentioned to you last year that government spending was down after the elections, but that's back now. So the outlook for the projects business is positive from an order inflow point of view and execution. Our central air conditioning, commercial air conditioning business, which is where we are number one in the country, that is also recovered well. The first 6 months of last year was slow. We saw some pickup in H2 last year. I think the outlook right now is positive. Of course, there's some amount of uncertainty around what's happened between India and Pakistan, whether that'll impact private capex in the short term. But as of now, April has been good. May is looking positive. So we remain optimistic about that segment. And I'm sorry, you asked the second question about our money raising and where we are. So we raised 1,000 crores, as you know. We have deployed most of it already into capex and into, in capex, it is in R&D, it is in manufacturing capacity, and it is in digitalization. So we've made very good progress in the last 12 months of deploying that capital. We have a brownfield expansion of our room air conditioner plant, which is underway. We have a brownfield expansion of our commercial air conditioning equipment plant. Again, that is underway. These are two big investments, and we're setting up a R&D center in Pune, which will be focused on electronics design. So that has also been approved and is underway. So we've got some fairly significant capex planned for FY26. We're looking at deploying about 600 crores of capex versus last year's roughly 400 crores.
There is a challenge which some of your peers are telling me, that while big companies are becoming independent, there is still a very large dependence which is there for the industry on Chinese-backed compressor. And the supply chains are looking slightly shaky in terms of availability of compressor. And if there is no compressor, well, the AC is not going to function. Is that a real challenge for you as well?
I think, yes, definitely it is. So supply chain resilience is a big priority for us. Focus on compressors, electronics, copper, refrigerants. These are the four areas that we have some work to do. The compressor challenge is real. The government has given an extension to the entire industry, which has permitted all of us to continue to import compressors from China for another year. So that gives us some amount of time to prepare. We have made alternate plans, which will require the next 12 to 18 months to execute. We feel confident about executing those plans. It involves some investment from our side. It involves some reallocation of supply chain to some other countries, and looking at how some multinationals will come and set up capacity in India to support us. So we've got a three-pronged strategy, and we're quite confident that with this extension that the government has given us, we should be able to manage this challenge.
Really appreciate your time. So glad you could join us, and thank you for your valuable inputs.
Thank you.
It is holding